Yes, we can hear you.
So this is the first um session of the Advanced Mentorship 2.0. Sorry, I've not been that active on the group for now because of what I'm handling. You get because of even my trading. I'm not really active trading this period. I'm just trading on gold and blah blah blah. But I think I'm done with what I'm doing, so everything will go back to normal. So let's start with what we want to do today. Now, this is this is one part of mentorship that I think you all need to understand first. You get now in something one first, you need to be dedicated about it. You get I want to see the passion in all of you. You get let it be something that you're so passionate about. You get because it's apparently this thing that is working for this guy that's okay, that made this guy profitable. You want to cut off all the noise, all the distractions you've had in the past, and see how we want to make this thing work for you, right? So paying for mentorship doesn't even guarantee you profitability. You get it doesn't even guarantee you profitability. Do you understand? Well, I hope everyone hears everyone here gets what he or she is looking for. So I think this is a trade I had yesterday. You can see the sniper. So today we'll talk on market structure, right? I'm going to talk on market structure. A minute, please. So under market structure, we want to look out for what? We want to look out for two things. Now we know we have the basic market structure. We have the basic market structure, and we have the advanced market structure. So for me, I trade the what? I trade the advanced market structure. You get now for the basic market structure, we have here that sorry. For the basic market structure, we have market structure to clear out as in a bullish way, like our higher high, higher low, higher high, the normal higher high, higher low, and higher high, and higher low. The same thing for what? The same thing for the bearish, lower high, lower low. Sorry. And keeps going on like that. Now, if you look at the synthetic chart and the market, you tend to see that it's very complex before you see the market going this way. If market structure was actually played out this way, I think none of us would have come from mentorship. It's just you buying from the low and selling from the high, right? From each demand and supply levels. So you can see that market structure is too complex to be going this smoothly. You get so you don't tend to see this. So that's why you want to look at the market why in the advanced way. You want to look at market structure in what? The advanced way. Now, in advanced market structure, we have different models you want to look out for, which I'll be showing all of you. So you just want to sit down and pay rapt attention, right? And this video is recorded. You can always come back to watch out for the video. Now, most of you might have known this, but let's just go through it again for the advanced market structure. Now, in an advanced market structure, you want to always look out for what's liquidity. what we are concerned in the advanced market structure is two things: liquidity, inducement, and POI. Those are the main three things we are always out for on advanced market structure. Because one, the market runs in what? The market runs in liquidity. So you want to try as much as possible to do what? Identify a particular liquidity. Market takes out the liquidity. You find out your POI and you take the trade. You have your sniper with your confirmation in trade. If you want to stack, you stack. If you want to go all in, you go all in. If you want to be conservative, still ties down to you. But before we go to that side, what am I trying to say? In the advanced market structure, you want to spot out for what? Three things: your liquidity, inducement, POY. Yet, those are the three things you want to look out for. So I'll be showing you the few models on the advanced market structure that you want to be looking out for. So on the first one, we have what? We have the A plus setup. So now we have market. Let's use the bullish scenario for all this explanation, right? If you have any question, you could do well to drop anything on the comment section on the class. You get, then I'll answer your question. Now, take for instance, let's use the bullish scenario, right? You want to look out for what? You want to look out for buys. So on this face model, you have something like this. Market giving you what? A sweep of liquidity to the downside and this structure sheet. So you have a sweep, market sweeping out this low. Market sweeping out this low here. And this push to the upside. Then you have what? You have a 50% retracement to the downside, creating what? Your structural liquidity around here. Then we have another push to the upside, giving you what? Another break of structure at this point. All right, so what do you want market to do? You want market to retrace down, take out what? This structural liquidity and react from what? This is your POI and give it the main push to the upside. So definitely, yeah, we have here as what? A QMR or what? A POI. Then you spot this out as what? This is what we call a structural liquidity, which we'll explain it on what our liquidity class. Then we have here as what? Protected low. We have here as what? A break of structure to the upside. You get. After this break of structure, you have the structural liquidity. Then we have another what? Another break of structure. So now this is your complete A model setup, your A plus setup. You get. So this is the first advanced structure model you want to look out for on the synthetic market. It plays out a lot. It has a whole lot of win rates. It has a whole lot of win rates. So apart from that now, going to the next one, we also have something like this, whereby we have a sweep of liquidity to the downside. You get. The market does something like this. Now, in this case, what do we have? Now, we have here that market has done what? Market has swept liquidity. She have seen market sweep liquidity to the downside, and it's supposed to push up. Then it now creates what? So now this will now be what? This is our protected low. These are protected low, right? Then we have here as what? In this case, we have here as what? A structural liquidity. Then we have here as what? A break of structure. Now you tend to see that this case is different from what? This first advanced model that I showed you. You get. You tend to see how the structural liquidity is played out. You get. And we have only what? We have only one break of structure to the upside. So in this case, you have your PY from here. Maybe some other block around here. You get. So this also has what? A good win rate. You want to also look out for this. So what you do is that after the class, you go back test all these models. Try to look out for them, past price action and recent price action. You get. In the review, we have a whole lot of pairs. We have more than 15 pairs. So you go look out for them. You'll definitely see them. So we have this one here. Now this one is called what? A B plus setup. You get. So in B plus setups, you don't want to be risking so much high on B plus setups, right? You don't want to be risking so high on what? B plus setups. So you want to look out for that as what? A B plus setups. Then this one is what? So A plus. So let's look out for the other one. In this case, I think we have this as what? You have a bullish scenario. So you want to see price do what? Want to see price taking out, want to have a sweep of liquidity, right? And a push to the upside. So in this case, we don't have any inducement. Market just comes and reacts from what? This demand level here. All what we have here is just what? A sweep of liquidity. So you might also want to look out for this setup also in your advanced market model. Then we also have another very important model in the market that you also want to look out for, right? So in this case, you still have everything intact as your A plus setup. But market gives you a sweep, break of structure, another structural liquidity. You get like your A plus setup, right? So we have here as what? We have here as what? Your POI or your demand level. Should be. Then you want to do what? What do you want to see market do? You want to see market taking out what? Giving us what? This retracement to the downside. Taking out this low. Coming back here. And do something like this to the upside. So you now, your entry is what? Your entry is on the retest of what? This demand level. So this one also plays out a whole lot of time. I think I made some money using this setup last week, something like that. So you have here as what? Your break of structure. Now you can all see the differences in what I'm showing you. All see the differences in what I'm showing you. And these are what? These are all advanced market models. You get. These are all advanced market models. Then this one, you see how market came down, did not respect the demand, took the demand out, cleared out liquidity, pushed back to the upside. We tested this and hit our target. You always keep your target at what? This row of liquidity. Right? So these are the advanced market model. Now, these are just advanced. Now, under the advanced market models, we now have what we call what? The breaker blocks and what? The mitigation blocks. Yet, we have what we call the breaker blocks and what? The mitigation blocks. Now, for me, I personally do not really trade breaker blocks, mitigation blocks like that. But once in a while, once I see them form, I take trades based on them. But I don't give my normal risks. Okay, I not risk that much. So now in breaker block, we have something like this. For those who don't know, have a sweep of liquidity, right? Market push to the upside, give you this expansion. Always in every breaker block, there's always this expansion move like this, whap, to come this way. Then we have something like this. So you mark out here, and we have what? We have here is what? The sweep of liquidity. You get. We have there as well. So this is an example of breaker blocks. And the breaker blocks comes in two types. Now you can have this other one that now looks like this. Have this other one that now looks like this. Gives you the expansion. It now creates an inducement. So you have this. Now these ones are highly probable now because what we have an inducement there. So we take here as what? An inducement. Yeah. This is how you trade a breaker block. This is how trade works on cap blocks. Any question? Under the breaker blocks, I've shown you how ones we have the sweep of liquidity, showing the ones that we have, the ones we have the inducement, and the ones we don't have what? The inducement. You get the same, it's the same way for being bearish, right? If you turn it upside down, it's the same way for being bearish. You get same way for being bearish. Then we have what? We have the mitigation block. You get, we also have what we call the mitigation block. Understand? We also have what we call the mitigation block. And this is how the mitigation block works. The mitigation blocks is what we call, we look at something like this. Right? Look at something like this. And yep. Then we have this expansion. Almost the same thing as with breakout block. Get almost the same thing as breakout block. So these are the advanced models you want to look out for. Please. These are the advanced models you want to look out for in the synthetic market. So you could always come back, watch them, you get study them. First, you need to go back test it, because once you start seeing them in the market, you won't be able to unsee it, right? So you just need to practice your eyes, start seeing these setups frequently, and frequently. You get. I think someone has a question. Unmute your mic, Aaron. Say something if you have a question. Or you just type it. Boss, please, can you explain what is liquidity sweep again? Now, this is what a liquidity sweep looks like. Now, I said in the basic, let's go to the basic market model. Now, this is what a basic market model looks like, right? You tend to see, what do you tend to see on the basic market model? Now, we tend to say that in each basic market model, the low is not being taken out. This is the rule of the basic market model. Each low, get to see, market does not come to take out this low. Market does not come to take out this low. Now, in the case whereby in basic market structure, market takes out the low, they tend to see it as what? They tend to see it as a change of character. I mean, market is turning from being bullish to being bearish. I don't even understand. So now the basic market structure trader will now tell you that, okay, market has taken out this low. What are you looking out for? A retracement to the upside, and it keeps going like this. This is what they are looking out for. Do you understand? So now, if what happens when there's a sweep of liquidity now? Now, take for instance, market now does what? Market comes, takes out this low. You get it has taken out liquidity, right? In the sense that the basic market structure traders, they were waiting to do what? They were waiting to long this market. So now market does what? Market comes down and sweeps them out of the market and now goes their way. So what in that sense, what we call here is what? Market just came to do what? Take out stop losses, take out liquidity. Do you understand? Market just came, took out the liquidity and did what? Pushed to the upside, created another break of structure again. So this is what we call what? A sweep of liquidity. You get a failed order block. Now, this is what this is supposed to be what? An order block or a demand level that price was supposed to respect. You get price was supposed to come here, tap in here, and push the upside, do something like this, right? Keep pushing, going that way. But what did he do? Now came all the way down. And see, came all the way down, took out the liquidity and pushed to the upside. So this is what we call a liquidity sweep. I hope I've answered your question, right? So now let's check if we see something in the markets. Now for this V50 buy, I think this one was based on what? QMR. Now you can see this is what we call what? A QMR. You also have QMR entries, something like this. QMR entries, we also have QMR entries, something like this. Then we have a sweep, something like this. This is where you're taking your QMR from. Same thing with being bearish. You have this as what? A QMR entry. So Also note this, sweep of liquidity, expansion to the upside, market coming to retest what? Your QMR. Now let's go back to V15. We had what? What do we see? Market came, gave us what? A sweep of liquidity, push to the upside, right? I had this break of structure here. So is what? It's making it valid that we had what? A sweep of liquidity there. You want to do what? You want to draw your QMR. Now what do we see? You all can see before I even, for those who were on the Zoom, saw when I spotted this out, right? You can see what? You can see market triggering what? Your QMR. The target is where? Target is here. Simple as that. What's more? Then you can see how the sniper is. Now, if you're stacking on such kind of trade, can make your face 1K, can make so much amount of money from such a trade like this. You get so just go back, sit down, study the models that you've been shown, right? You see them playing out in the market so well. Spot out your liquidity and send it to the comment section. Send it to the comment section. You see the section for assignment. So you all should go spot out the model, each model you're spotting out and send your chart setup. Just um write the model name under. You get this one has liquidity. Explain what you're dropping to a layman so that I know that you understand what I taught here. Now, for if you're looking out for structure, you can look out for structure on all time frame, but don't go below the 5 minutes. Don't go below the 5 minutes. There's no structure you're looking for below the 5 minutes. From the 5 minutes to the daily candle, you get from the 5 minutes to the daily candle. 5 minutes to the daily candle. In this case, this was liquidity, structural liquidity. And we had what? Another break of structure. Market came, took our structural liquidity, expected what? A sniper. This is how you want to trade. Want to trade like a big man. Trading is very simple when you know what you're doing. And when you stick to one thing, not that when it's not showing results, you want to give up. No, stick to one thing. It's just one good trade you need to set your life apart. Just need one good trade that will just bam, give you that gold win. Then you keep going, keep going, keep growing, keep going. Small by small, no competition with anybody. You're just on your lane doing your thing. And so now I had this breaker block, but market did not come all the way down here to tap me in. You see, just missed entry all the time. So now why did I choose this breaker block? I see that we have what? We have an inducement here. So it's the same thing all over again. You can spot them out as much as you can. But me, I like spotting them on the 5 minutes. You see them much on the 5 minutes, see them much on the 10 minutes, see them much on the 30 minutes, 1 hour, 2 hour. You get. But there's a high probability that market might come all the way down here and still, tapping here. So I'll drop the signal group link on the group for everyone to join. All right. I think that is just what I've not done yet. So you could. So can liquidity be immediately after a downtrend? Yeah, I don't understand that question. No. The liquidity be immediately after a downtrend. How? I don't get. Please re-ask your question again. So now let's look at the market. Let's see what we have on the market, if we have anything. So now this is your A plus setup. I'm just having missed. Please don't draw on my screen. I'm just having missed entries this week. You get. So you can see here we had a liquidity sweep here. Now this is your liquidity sweep here. Spot out your liquidity sweep. Spot out what? Your breakout structure to the upside. This is an A plus setup. Spot out your second breakout structure. What is your structural liquidity? Your structural liquidity is at this low. Spot it out. You get. So I was expecting market to come here and respect us and give us this push. See the buy now. Crazy buys. You get. But if you wanted to continue, you wanted to follow the trend, you would have caught up with this. I didn't even respect the breaker block self. You get. Or market might be trying to create an inducement here, right? then coming to an anchor and react from the breaker block, something like that. But let's all see. It's just that if you know what you're doing in the market, once you're seeing market structure, you definitely know what to do at that particular point in time. You definitely know what to do. Okay, what is market news? Market forming a breaker block. It's market forming a mitigation. It's market forming a QMR. It's market giving me my market structure. Am I seeing my market structure playing out here? But most of the times you've seen the mystery. That's why I've not really gotten any good trade on VIX this week. Now look at this one. Market came all the way up here, ignoring my entry. You're seeing how my entry are being missed, right? Crazy one. Crazy, 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 crazy one. So that's that on. So okay, I think I've seen a good setup on V50 here. So you can see here, why do I want to sell V50 from here? So we have a sweep of liquidity here, very important. We have what? We have this small baby structural liquidity here. And this is your B plus setup, right? For those who were following. Now this B plus setup is this one now. Okay, it's not on this chart, but if you're following, you'll know that this is what a B plus setup. Whereby your structural liquidity, whereby this setup has only what one break of structure, but this is for what? For a downtrend. So you have this. So I want to probably short P50 downside. Okay. Let's check another pair. Let's probably check the 100. Let me see P. Let me see. Nothing on V100, sha. Nothing much on V100. Well, I think V100 is coming from here. So particularly for this one is just, sometimes you might have something like this. This one is just a demand level that has what? A liquidity. There are a lot of opportunities in the market. A lot of opportunities. You can see you enter your confirmation. Once you use confirmation, show you how to stack to have great higher rewards. So this is a trade I would have taken on V100. Very clean sell setup. This one is on V150S. So just go practice. You send a setup, explain why you're sending that setup and why you feel market will buy or market will sell at that point. All right. So have a good day, everyone. Sorry for coming late to class today. I just overslept. I think most of the time the market respects BBLCK, breaker block. I think that's what you're writing. We barely have any pullback to the. Oh God, I don't understand what you're writing. I don't go school. Oh. I'm joking. But just try to be more detailed. I don't really understand those abbreviations you're saying. So let's check. Let me check. What's V75 doing? I think I had a setup of V75. Okay. Okay, did not expect that. So, so that's that for that, my people. Look, that is that for that. V25S. What's V25S doing? So I'm just doing a scan through. You get scan through looking for setups. You see how my eyes are very, very fast looking when it comes to look out for setups. I think I have something here, but I'm not sure V25S will come all the way up there. Let's see. V10. What do we have on volatility? 10, okay. We've already done something. At this pair, the buy, that's a really, really great miss. V10S. If I want to take a trade on V10S, I think I'll be taking it from this QMR here. So we have a baby structural liquidity here. Don't worry. Once you start seeing these things, you can't unsee it. Just know that You'll be very, very, very fast. You see the way I'm very fast in spotting out setups. Be very, very fast in spotting out good setups. You get thing I've seen that we have what we had a sweep of liquidity here, right? I had sweep of liquidity, break of structure, retracement, your structural liquidity, another break of structure. What do one market to do? One market to do what? Come here, tap us in and boom, give us the expansion. So see you all in our next class. I'll send the recorded video to the recorded session, please. If you have any question, yeah, counter trends in respect very, very, very well. Counter trends very, very well. I trade counter trends a lot. Trade respect. Please, Vivian, one model is the last page you just checked on V100. The model I checked, the one I did on V100 was just order block, a demand level, and liquidity. There was no sweep of liquidity. You get, I'm not sure there's a sweep of liquidity here. So it's just me drawing from what this demand level. You get, then we had what? A liquidity here. Market respecting what? Yet. So that's the model. The V100S. Should be something on V100S. Let's check. Yep. It's already playing out. Not as much. So I think we have this demand level here. But let's see. Down. That's that for that. Or we can have market come all the way up here to respect this breaker block. Because we have this, we have seen, you see, we have this expansion of market is creating liquidity. You have seen this as well. Liquidities have liquidities here. So I want the hundreds to just come here and give us something like that. So don't worry, with time, as far as you're with ViX Mayor, as far as you've paid mentorship, I guarantee you profitability, right? Don't worry, I guarantee you profitability. Just stick to your game, put in the work, put in extra work, make 2025 a different year. You get for me, I became profitable. I think I became profitable within 6 to 7 months in trading. You get this is just my 1 year in trading. So you too can do the same. I'm wishing you all a good day and a nice weekend. Catch you all later.
Boss, please, can I ask you a question?
Yeah, you can ask. Well,
On that VIX 100 I just cancelled now, I saw a sweep on the downside.
yeah.
On the downside. No, the previous chart just closed now. The previous one.
This is 100 now.
No, the one you just changed now. The one okay, it was 10.
Where is the sweep of liquidity?
Not this one. Not this one. Not this one. The chart that you closed before the VIX 100. Yes, this one.
Okay,
Yes,
100.
there's a sweep down.
So you saw a sweep of liquidity here.
Yes,
Okay, let's look at it. Yeah, there is a sweep of
there was
liquidity.
a sweep.
Yeah, we could also look out for this, but that's if market will respect the counter trading you're doing because 100 days is bearish. You get so if market comes here,
Yeah,
expect here, you can if you get your confirmation, you can definitely take the trade, but just know that what you're risking should be minimum because this is high risk.
okay.
Because we have the sweep of liquidity and we have what liquidity
Yeah.
market to come take out, right? So let's see how it plays out.
All right, thank you.